All right, everybody, welcome to week 16 of Selling Weekly Lottos. Every week I sell what's the equivalent of lottery tickets to gamblers in the stock market, and that's how I make passive income. As you can notice, we got a special guest here today. This is Douglas Furtree. Mr. Furtree is going to be joining us in the video today. He's my investment advisor. All right. Let me just start out. Before the disclaimers, I got some comments. Some people disagree with my use of the word lottos. So these aren't actually lottery tickets. It's just a term people use in the community that for me, I just use it as a term to describe out of the money options that I sell that are more likely to lose. I just call those lottos, okay? Start with the disclaimers. Number one, all my positions are covered. I don't use margin. Cash secured puts and covered calls only. All right. Number two, I'm happy to buy the shares or sell the shares if they get assigned. I agreed to it, so just do it if it happens. And then number three, this is not free money, guys. This has a chance to lose. There's a risk. That's the reason the premiums are so high, is because there's a chance for the stocks to go up or down a lot, which can take you out of position. All right. That being said, the winner this week is me. All right. Who would have guessed? All right. This week I made $3,460 using $96,000, and I did sell some shares, which I'll talk to you about, after I show you all the positions. So first of all, let's see the options positions. Bazam! All right, so this week I did the same thing as last week. I sold the covered strangle on Robinhood, the 115 put, and the 125 call, which I got a profit of I sold them for around $630 total, bought them back for $60, and that was around $570 in profit. If you want to really get the breakdown if you're new and you want to get the breakdown, go to my week 15 video and I show you exactly what the covered strangle is about. It's just selling an out of the money covered call and selling an out of the money cash secured put at the same time. All right, but I don't want to do that all over again this video because it's all there in the last one. All right, and then I had the take two covered call, okay, a 255 covered call, and that I sold for around $330, and I bought those back for $60, so that was around a $270 profit. All right, and let's look at my shares that I sold. All right, boom. So the shares made up the big amount of the profits this week. I sold 200 Robinhood shares that I bought for $23,000. I sold them for $1,350, $1,350 profit. And then I also sold my take two shares, 200 of those, for a $1,270 profit. All right. So without the share sales, the options income would have just been around $840 using $96,000. And I was debating whether I should include the stock sales in this, because I actually have not, through this entire 16 weeks, I've not sold my shares unless they got assigned. And I was discussing this with other people in the community if I should include this as income, and they said yes, because I bought the shares within a week and I sold the shares on the same day of expiration, even though they weren't assigned. That should count as one trade. So I included it, but let me know if you disagree, if you think I shouldn't include the share sales because they weren't assigned. Just let me know. I'm open to any opinions. But yeah, and I'll admit it, guys. I got a little bit spooked last week. That's why I sold the shares. I normally don't unless they get assigned, but last week the market was a little shaky, and I got spooked, guys. So I sold the shares. I decided it's better if I take these profits and I save that money in case there's continued weakness in the market. And so I did sell the shares. Normally I would just write more covered calls, but I just thought this was the better decision. But That's another amazing thing about this strategy is check out what happened. The shares went up, but not fast enough. So while the shares went up, my covered calls also went down, right? So I won on both. And also I won on the cash secured puts too. So shares won, covered calls won, cash secured puts won. All three legs of this strategy won this week. This is as close to as a perfect result as you can get with this strategy. I dare you in the comments, name something better than this. If there's something that's even better than this, I want to know about it. Let me know. All right. I don't think there is. All three win. All right. So that's a really special part of this strategy is your shares can go up, but not fast enough, and you'll still get all the profits from the covered calls, the cash secured puts, and you'll get appreciation on the shares. All right. Some people did let me know that they really liked the chart that I showed last week. So let's go ahead and do it again. Hoya! All right. This is the Take Two chart. So before I do this, I just want to let you know, I'm not saying you should do this. I'm not saying I'm the best investor of all time. I'm not saying I'm some genius and hedge fund managers are like on their knees to know like my strategies or anything. All right. This is just what I decided, my choices, and what I came up with. It's not anything like, it's not the best thing ever. It's just what I did. All right. So you can see from this chart, all right, the green line, like I said last week, this green line's not technical analysis. This is just a trajectory line. It starts out where I bought the shares and sold the call, and it ends on the day the call expires at the break-even price. So around 250, I was looking at Take Two and thinking, hey, this looks like it can kind of break out. It's messing around here at 250. I'm thinking it might break out. All right. So I bought the shares at around 250, and then I immediately sold a 255 call. All right. Because I'm thinking, what if it doesn't break out that much? And the 255 calls are priced pretty good right now because the market thinks it's going to break out. So they're got a little bit more implied volatility. All right. So I sold the 255 calls, and I was thinking, hey, if it gets there, I'm happy to sell the shares. I'll get a good return on the shares. So throughout the week, you can see that it just followed the green line. It just followed the green line, and I wasn't making any money on my calls. They were just staying the same price mostly, but I was getting unrealized gain on my shares. And then on Thursday, it crashed because of some news coming out that one of their games was delayed on Nintendo Switch or something, and it just crashed. So the options contracts, the covered calls, they dropped about 80%, okay? So I took the profits on the covered calls. Now, just know, those 200 shares I bought at 250, when it was at 240 at that crash, those $250 shares that I got, I was down $2,000 on that, and I was only got a profit of around like 300 on my covered calls. So there's some people don't like this strategy because of that, because you can lose more on your shares than you get from the covered calls. But I don't mind because I like Take Two. They make the game Grand Theft Auto. You might have heard of it. The next one's coming out next year, so I think that's going to be a really big hit. So I like Take Two stock. Don't buy it just because I say so. I like it, guys. Do your own analysis. But yeah, I wasn't worried at all. I actually bought more during that dip, and then the next day, look at what happened. It reversed the entire trend, and it came back to right at the peak of my line, literally like precisely there actually. So I decided, hey, this is where I was going to sell my shares anyway if it got assigned. So I sold my shares, and that's my thought process, guys. So I got a win on my covered calls, and I got a win on my shares. Pretty good for me. All right. Let's take a quick look at my benchmarks. All right. Boom, bam, bang. All right. I don't want to focus too much on this, guys. Because the since the results of this week are so drastically different from my previous weeks, the all the averages are pretty skewed right now. So, but the important thing is my income is now above 23,000. I think close to 23,000 actually. I think I'm like 2 Subway sandwiches away from $23,000 in total income. If you know, Subway sandwiches are $15 now, by the way, for a 6-inch. All right, if you haven't been to Subway lately and that's news to you, just know that $15 for a 6-inch sub. And my average risk is down to below 125,000 now, 1/8 of $1 million. This is around where I think I'm finding out where I'm comfortable in the like 100,000 range, maybe a little bit less, a little bit above. That's where I'm most comfortable, and I don't panic as much, and I don't think about the market too much. And then I added a new one called Total Yield because someone told me that my estimated annual percentage yield number is just fake number and doesn't mean anything. So I added a total yield. My total yield right now is around 18, almost 18.5%. All right, but you can see this week 3,400, almost 3,500 gains. The only other week was all the way at week 6 where I got 4,000 in gains, and these 2 weeks are the only 2 weeks that I sold shares and counted the shares as income. All the other weeks were just options, and that's why the income this week is so high, because the share sales is where you're gonna get actually the most profits if the shares go up. So I'm pretty happy with the results. I think this was outstanding results this week. And let me know if you have any questions. Thanks for watching. And I'll see you next week for 4 months. Peace. Say bye, buddy. Say bye.